What's up, guys? This is Life of IFA. For those of you who do not know me, I came to Ergo in 2021 through mining, looking for a promising project whose fundamentals I believe in and could get in early rather than just mining ETH for short-term rewards. Since then, I have grown in the space and form part of the Sigmanauts. I've done some films on Ergo, and also act in the NFT space, most notably with Rosen Watchers, which is a NFT series on the Watchers of Rosen Bridge. If you have not yet checked it out, you can find them on Mu Finance's marketplace, Mu Mart, or have a look at rosenwatchers.com. Next, I'm looking to sink my teeth into much bigger things and start building on Ergo through making use of my creative skill set in concepting and ideation, teaming up with our community, you to join and grow our ecosystem through this venture where we ideate, invest, and build for dear life through governance. And in doing so, we grow trustless via a decentralized autonomous organization focused on the growth of the Ergo ecosystem. This brings me to why we are here today after your feedback on X on my initial reach out on the poll. So lo and behold, the Genesis of Autolykos, the decentralized venture capital collective built on Ergo and governed through DAO via Paideia. So what exactly is Autolykos, why the name, and what's the point? Well, Autolykos is a community-driven DAO with the vision to bring concepts and funding to life to build the tools and platforms we believe in for both investment returns and to grow the Ergo ecosystem. As it says, we seek ordinary people shaping extraordinary growth through a trustless governed venture capital collective, VCC, that drives the adoption, use case, and innovation on the Ergo blockchain. I believe we can do so through creating tools and platforms we can utilize and market which carries everyday real-world use. In doing so, I believe we will not only grow the market cap and in essence the price of Ergo, which is why we are all here when it all comes down to it, but it also presents the chance to earn a return on investment whilst building our ecosystem and its use case from the ground up. The best part is we can all partake and do not need to be a developer. We simply have to believe in the tools we concept and put our money where our mouths are, along with each utilizing our skill set and time at hand to make Autolykos grow. So let's ideate, invest, and build together. For if I remember correctly, a much wiser man than me once said we need to take as much control over the ecosystem as we possibly can. So a bit more about Autolykos. Autolykos is the community-backed startup fund governed through DAO, rooted in Ergo. We seek ordinary people shaping extraordinary growth through a trustless governed venture capital collective that drives the adoption, use case, and innovation on the Ergo blockchain. For the purpose of this pitch, we will refer to our native token as the sig-l, which stands for Sigma Lycos, but I will still put it to the community to a vote and have currently concepted sig-l, sig-a, auto, or Lycos as the name of our token. Moving forward, our native sig-l token serves both shareholding and governance of Autolykos through token ratio and shapes the first collateralized equity token with appreciative nature through its tokenomic structure and characteristic. We will expand on this a bit later, as I'm sure you must be thinking, what the heck is a collateralized equity token? Well, it's my brain fart, and I'm proud of it, to be honest, but we'll need your help if we get this off the ground to make it work, as it requires some smart contract and Oracle work from what I can gather. The sig-l token is limited to a max supply of 1 million and governed per project cap to circulating supply, serving both shareholder stake and investment growth. Through community investment for the development of these concepts, revenue is generated with projects developed by Autolykos, and profits are first relocated to the initial investment pool to replace the collateral given by our investors. You and me. Once investor collateral is returned, sig-l is driven inflationary through profit allocation. So how do we begin? Well, we need a strong, steadfast community for investment, input, and governance to grow and build Autolykos as the venture capital collective that drives adoption and the use case of Ergo as blockchain through real-world use. Another wise, slight tall timber once said, "To grow Ergo, we need to build on Ergo." During the seed and sow rounds, investors allocate SIG-USD to either MuFund or Ergo Raffle version 2, and they will receive the equivalent sig-l tokens in return for governance on Paideia and their initial investment return. Now, for the seed round funding, it will mostly be funding me to set up, design, and develop the rest of the tools we will need to look like a proper startup. I have already begun on this, as you can see, but unfortunately, as a freelance creative director, I need to also cover some costs for my time and put bread on the table. For the seed round, I will, however, give a proper breakdown of cost for each item to be developed, what I have done pro bono, and what is outstanding. There will also be physical expenses I cannot all carry, like domain purchase for 1 to 3 years, as well as the hosting, and so forth, as well as allocating a small marketing budget to utilize our tools such as a marketing video and digital brochures to grow our audience and reach on X and YouTube. When we get to the SAO round, there is not much that I can, from a skill set point of view, except steer and idea it, as the funding here will go to pay our developers to develop the smart contracts in Oracle we need for both our token as well as the investment pools and their structure. After the grow round is complete and these have been developed, sig-l is allocated to the first investment pool, followed by additional sig-l to the circulating supply for the funding and development of our first project and tool, which I will give you a quick overview of as they currently stand. Yup, there is the wise, slightly tall figure I was referring to. Always love seeing his legroom snapshots when he is traveling. Here you can find a bit more on the tokenomics before we overview the how. Why collateralized? Well, the tokens are backed by a dollar-based stablecoin collateral pool on Ergo, initially tied to 1 sig-USD per token. The equity comes in as the collateral is repaid, and the token's value tracks the startup's growth, resembling traditional shares and governance through DAO. The token is pegged to appreciating, meaning it starts pegged to a dollar value but transitions to an inflationary model based on collateral growth through the Sigma equity model. This is done through our smart contract in Oracle we developed for the token. So what is the Sigma equity model? Well, sig-l starts off by being pegged 1-to-1 to sig-USD until the initial investment collateral is returned through revenue we generate. Thereafter, the base of sig-l always remains stable and secure through the 1-to-1 ratio, countering volatility but allowing growth. After collateral is returned, sig-l depegs from the dollar value and becomes inflationary. Upon the latter revenue above the 1-to-1 base changes to our Sigma equity model. The Sigma equity model runs through smart contract and the use of an oracle. Revenue generated from the project return now forms equity and is added to sig-l pool, forming the inflationary valuation of the token. To the right, I have structured what I have envisioned to set out profits above the dollar base value that shapes the combined worth of sig-l, but this can be changed or adjusted through a vote of the AUTOLYKOS shareholders as DAO, and perhaps someone smarter than me with better ideas to make our token grow strong yet secure. When we look at the allocation and distribution of the sig-l token, AUTOLYKOS seeks to follow the footsteps of Ergo and will follow the same fair distribution parameters, with 96% token supply going public, 3% is dedicated to the team, which is currently me, and needs to expand to a couple who can put in the work and have the skill sets we require, and 1% is dedicated to the ideator whose project was successfully funded, and these occur on a per token to project fund ratio added to the circulating supply. It is important to note here that for both the team and ideator, the tokens become locked in smart contract and remain worthless until sig-l collateral is repaid and becomes inflationary. So there can be no rug pulling or early cash out, and we carry the same risk as we invest time in ideation, with reward only coming if prosperous. The 3% and 1% is also only available and unlocked by the DAO per funded project and round. So, for example, if a project is funded for 1,000 sig-USD, the public gets 1,000 sig-l to fund the project, and the team gets 30 and ideator 10, setting a total OD 1040 sig-USD to first stream back into the smart contract. This also brings security for investors within the volatile and risky crypto space that even with just 3% allocation, the team can't just suddenly cash in their 30,000 tokens of the total supply and drain any sig-l liquidity. All in all, the sig-l token should be seen more as a appreciating share, and in all honesty, it would be dumb to sell them through trade as they appreciate in nature and gain worth as our projects generate revenue. Now, the revenue structure of our projects will follow two phases. First, repaying investor collateral at a higher margin, and then sowing to the teams running the project and our ecosystem while growing the investor's risk. During the PEG period and investors' funds to be returned 80%, all profit is relocated to the sig-l liquidity pools to return the investors' liquidity, as this is the first priority. Only 20% is allocated to the project team, not AUTOLYKOS team, but the funded project team as buffer for running costs to accumulate once investment funding for the startup depletes. Once the initial investment is returned, profit allocation is adjusted. 50% is allocated to the project team for sustainability and growth. 30% still to sig-l, driving its inflation and return on investment for investors and holders, and 20% is allocated to the ecosystem for sustainability and growth. Currently, I envision 10% to be allocated to miners in a sort like demurrage contract for post-2045 rewards for mining to keep the blockchain feasible, 5% to our Sigmanauts to fund proposals, marketing, and uplifting what they can do to grow the space, and 5% to our Ergo Foundation to keep this intact with their limited treasury. Once more, percentages and allocation can be adjusted and voted for through DAO governance according to your sig-l shares. This is just how I currently envisioned it. But the long-term goal of AUTOLYKOS is to both empower and sustain new projects and reward its investors, as well as support our ecosystem in doing so. When it comes to our pilot projects, this is what really gets me excited and led me to conjure up AUTOLYKOS in the first place, as I can envision and concept up ideas that I believe can thrive on Ergo and blockchain in general, but by myself, I cannot bring them to life. It is important to note here that anyone can pitch a concept to AUTOLYKOS and get them funded, not just me, our internal team, or DAO. I just got going on these as they excite me, and that is what I do best. So the first three project proposals are focused on real world use and contributed by me, and I have a couple more up my sleeve, but don't want to get ahead of myself. And as I said, anyone in the community can ideate for AUTOLYKOS projects, and if voted and funded, will receive 1% of the project token allocation as reward. 1% might seem small for an idea that might thrive, but it is important to note that the ideators receives 1% as reward for the concept, but can still form part of their project, team, and the revenue it generates. At the end of the day, ideas remain ideas without funding and skill set. Otherwise, you can just bring them to life by yourself, and you don't need us. I will do a separate proposal and talk through for each project I am proposing here, and dive into more detail, and will need input from the community as I do not have all the answers. But as an overview, the three are as follows. First up, Rosen Pay or DeFi Enly. I can not yet quite decide on the name. You can help me decide. In essence, RosenPay/DeFi Enly is a decentralized multi-chain payment gateway built on Ergo, powered by Rosen Bridge. It is in essence a forked version of Rosen Bridge running as a second bridge on Ergo, though it does not act as a bridge or gateway. Users can suddenly bridge their assets at a lower cost. It runs with watchers and guards the same as Rosen Bridge does and supports the same networks, but with small watcher and guard collateral and cheaper permits, allowing for more to partake in watching and more transactions to occur. The focus is on payments, not bridging, and in its interface, the user specifies their network in token or coin, but in return, do not specify their end source as the input is bridged to the recipient as payment. This tool will allow decentralized multi-chain payments to occur on Ergo, and I believe will also lead to an influx of collateral and users on Ergo from a merchant perspective as well, increase the use of Rosen Bridge, and Exchanges like Mu Finance, as merchants and users from other chains will eventually swap and bridge their profits to their chain of choice. There is already a couple of existing stores and projects, I believe, can benefit from this tool, but none more so that our second project that needs funding, Crypto Stays. I would ideally like to fund the Rosenbridge team to fork and maintain this bridge, as well as they already have the skill set and structure. But if they do not have the time or need, I guess we can fund any developers to fork and build this tool, seeing as it is open source. Crypto Stays is the Airbnb running on DeFi. Users can list their properties, homestays, and experiences, and instead of fiat, earn digital assets as payment from any network integrated by Rosenbridge through RosenPay, or definitely acting as the payment gateway. So why this route for a project to fund? Well, it's a platform and tool that millions use around the world, and there is no such one for DeFi yet, according to my knowledge. There is Travala, which is the bookings.com equivalent for crypto for platforms like bookings.com, and sort of like where users can pay with crypto, but not for individuals listing their homes and experiences like Airbnb. Airbnb has tried to go this route, but seeing as they are a centralized entity and business, ended up not doing so, as I am sure it led to lots of red tape and compliance, and here enters opportunity. Did you know that Airbnb's revenue for 2024 was $11.1 billion, a 12% increase from 2033 with a net income $2.6 billion? Grok tells me that it estimates that already 5 to 10% of Airbnb users holds crypto, and 10 to as high as 25% of those users are in the upper side of the market. If a DeFi platform of Airbnb could win over 1% of their customer base on the same service fees and structure, it holds the potential to generate $1.1 billion of market cap and $260 million of net income. As things stand, that is more than 3 times the market cap of Ergo in one financial year. Let that sink in. Third on the list is custodian. What happens to our assets when we die? Sure, your spouse might have your paper wallet or ledger, but can they actually use it? Will they actually find it, or do they actually have it? Death comes unexpectedly, and I don't know about you, but I would like a tool just like my will back in fiat country to make sure everything I have is passed on to the ones I choose. Here enters custodian. It is decentralized, secure, and trustless, making sure your assets are not lost, but passed on to the ones you choose. I have a pretty cool and unique angle of how I think this can be achieved, but don't want to dive too deep into that right now, and we'll need the help of you smart ones on our chain to get this tool built if we can get it funded. There's a bit of our team, me, a gang all on my own, but hopefully community will onboard both internally as well as broader through our DAO. Time for me to join the ones I have quoted, and also sound smart to wrap things up from an Autolykos perspective with regards to Genesis. I'll say this. If the Autolykos algorithm is the heartbeat of Ergo, the community should be the same for its growth. Boom, now I'm famous and a philosopher as well. Well, thank you for your time if you made it this far. I hope to hear from you. I don't have all the answers, nor do I claim to know them, but I have a desire to build on Ergo and believe I can bring worth through my concepts and skill set, and so can you. As I said, alone ideas often just remain ideas, and we have to face the reality that we can't do all things. But I believe our greatest chance for growth and success is to be found when all our skill set and knowledge is unified. We all bring something different to the table. Please give Autolykos a follow on X or Telegram at autolykos.io, and find out more about the collective by reaching out on these channels and Paideia soon. Give me your input, share ideas, and get involved, and let's ideate, invest, and build something we believe in. Until the next one, stay classy, Ergo.